Are they investing in a cool idea or are they investing in a company?
Serve Robotics saw a significant surge up nearly 200% since Friday, but it's already starting to cool. Today, we're going to take a look at where the stock stands and the opportunity that this kind of surge provides investors and traders. Let's dive in. A 200% increase almost overnight had the attention of traders and investors everywhere over the weekend. Chris, Thomas, let's start from the very beginning here. What caused this stock to start taking off so quickly?
Well, the short answer is, Lacey, that investors got news that NVIDIA had increased its investment in the company by a significant amount. This isn't quite what it seems, and I know Thomas has some information on that I'm going to let him share later. Really what this came down to then was this was a mechanical move in the stock based on some fundamental factors. This is a tiny company. It's only got like a $336 million market cap. There's only a small amount of shares being floated. And on Monday, it just saw an exponential growth in trading volume, and that just set the stage for this huge surge in the price that we saw.
Right, I agree. This was really an NVIDIA story, an NVIDIA move, not so much of a Serve Robotics move. This was a small investment. It's teeny tiny. It's only millions of dollars, all right? It's related to convertible debt. It's not really a new investment at all. They've just converted an old debt into shares, right? So really that is dilutive for the stock, not really a catalyst for me. Ultimately, what we're looking at is a knee-jerk reaction. There are some market mechanics involved with this. It's really not because the company has done anything to warrant a huge stock price increase.
Now, give us some more context here, if you would. What does Serve Robotics do exactly, and why is the company all of a sudden getting this attention from NVIDIA? Why are they getting NVIDIA's investment?
Well, Serve Robotics, and I forget the name of the original company, but it belonged to another company that was bought by Uber in 2018, I believe. And part of that acquisition, Uber spun this thing out on its own. Since then, it's come to the market as a SPAC. Within that last couple of years, it's picked up a couple of investors like 7-Eleven and NVIDIA's got some. The company is autonomous delivery. It's delivering food and packages from like small grocery stores. It's really going to be tied to urban areas. I think as far as NVIDIA goes, they want the autonomous part and they want the data for training their models. They might want some computer vision applications. They probably don't give a squat about the business. There's lots of issues and lots of competitions. So really, I think the market is reading too much into the news. Serve Robotics is cool, but this is really just a small, old investment that NVIDIA made 2 years ago that's come home to roost.
Yeah, I think the name of the company you're looking for, Thomas, is Postmates. I think that's what it used to
Right,
be.
right.
The company, one of the things that you can say is the company has a licensing agreement in place with Magna International. That's the company's exclusive contract manufacturer. That's giving the company some revenue in the short term, but in this upcoming quarter, that's supposed to be the last quarter that they're going to get any revenue from that licensing deal. That's something that investors need to be concerned about. This company is hitting the environmental angle hard. The idea of why would you have a car deliver stuff to you when you can just have something delivered to you autonomously? Like Thomas, I'm a little skeptical here on the competition. I've already seen these things not from this company on college campuses delivering things autonomously. So I really kind of question what the moat is for a company like this, and do they have really any sort of first mover advantage at all?
Yeah, I don't
So
think
now,
they have a first mover advantage
Right.
because like there's like a half a dozen of these companies at least. They're real big in California where people like this kind of stuff and they have a very densely packed population.
Right.
well, now that we know kind of more about the cause, let's talk a little bit more about what is happening right now with Serve Robotics stocks. Just how big of a run up are we seeing?
Well, right now it's a pretty big one. I think the market's up about 400% or so at the high of the session. It's down from that a little bit right now. But again, I think this is a knee-jerk reaction. This is an NVIDIA story, not a Serve Robotics story. I mean, the volume is wicked high, but it's a
Right.
function of jumpy markets and short covering and speculators. Short covering is certainly an aspect of this move, and I would really expect to see the shorts reposition at these higher levels now that the stock has made such a big move.
Yeah, this was always going to be a short-term, short-term play for traders. Institutional investors aren't buying the stock very heavily. And I think retail investors, by and large, are staying away from it. This was a technically driven move. Traders are taking advantage. On Monday, I noticed it was already down sharply. I noticed this morning, though, it does look like it's trying to hold the level where it was at the close of business on July 19th. So it'll be interesting to see if it can hold that level or if it's going to fall through there as well.
Now, the big question that everyone's wondering is, should you be getting in on this surge or the pullback? And if so, when? We're going to get to that answer shortly. But first, here is a tool that you can use to track all of the movement on this stock and others in your portfolio. Let's take a look. Want to keep your finger on the pulse of the market? Text the word YouTube to 68285. That's 68285, and get free breaking news alerts from MarketBeat for the stocks that matter most to you. Don't miss out on crucial updates. Stay informed and stay ahead. So Chris, Thomas, we'd love to hear your take on getting into a stock that's experiencing a surge like this. What can you tell us about that?
Well, right now, I think investors really need to be careful about, they need to be careful to understand, are they investing in a cool idea or are they investing in a company? Because I think Serve Robotics is a cool idea, but I really don't think the fundamentals of the business would warrant an investment. Having said that, that doesn't mean that traders can't make some money here. But long term, if I was going to say you're going to be you're going to be putting money into this company as an investment, not so sure, unless you thought that it might be a takeover target, and then there might be some opportunity there.
Right. I view this as a trader stock.
Yep.
It's not an investable stock right now. There's no earnings, very little revenue. I mean, there is some revenue, but it's teeny tiny. There is supposed to be some wicked growth to next year, but we're still just talking $16 million. I mean, that's a drop in the bucket. I mean, NVIDIA probably burns that much money when its CEO turns over in bed at night. So now that it's moving, the opportunity is really to trade, and you have to be quick and nimble to really know it and really know what you're doing to be able to make money doing this. We have traders that are probably scalping the stock, which are buying and selling every couple of minutes to make small incremental gains. They're probably fading the market. When it moves up, they sell. When it moves down, they buy. They're certainly playing into the volume. And this morning, we got some news that a single investor bought some warrants. All right.
Yeah.
Now, at face value, that might sound like somebody else is investing in this company, but these were pre-funded warrants with an exercise price lower than the current stock price. So basically, this person gave the company some money for a chance to sell stock at a profit that's already in place. So we can expect these people to be selling the stock either today or very soon and cap gains. That's what I see.
So we're taking this as a trader stock, but the next big question here is, how long do you think that this run up might continue? When do you think a pullback could happen? I mean, it's not an easy thing to predict, but do either of you see some indicators here in either direction?
Well, I think that the run might already be over and the pullback has already begun, and I'll show you why on the chart. So this is a chart of the daily price action. Now, right over here, this is pretty important because this is the day of the IPO. It surged on the day of the IPO, but gains were capped at this resistance point. 2 days later, the stock set a new low, and new resistance was set down at the bottom of the IPO opening price. We move way over here to today's action, and we can see that the market spiked on huge volume, but it was capped right there at this resistance point, and it's been falling ever since. There is some support right here, but I don't expect this market to go and set a new high. I think that this level here near 1475 will probably cap gains for the foreseeable future. What we're looking at now is either a range-bound stock or potential for a new low because of how many speculative sellers there are now in the market.
Now, we talked about this being a trader stock, but I don't want to forget about the long-term investors that might be interested here. So are there any potential risks that a long-term investor should keep in mind with an up-and-coming company like Serve Robotics? Are there any potential warning signs for investors looking to go in on this stock?
Well, so like I said before, I would not call this an investable stock right now. I would put it on a watch list. It may make money. It may become a good stock down the road, but right now it's all about revenue and there's no revenue. So that would be the trigger for me for it to become an investable stock, but it's going to need to produce revenue, have sustainable revenue and growth, and an outlook for profits to make it be a really good investment.
Yeah, I mean, Thomas brought up earlier, this was a SPAC company and it's only been trading publicly since I think April of this year. So it doesn't mean it can't succeed, but the bar is really high. And generally speaking, if you're going to want to invest in a company like this, you're going to want to wait several quarters until it's kind of had a chance to be seeded in the market and you see what's going to go on. One of the ways, just what Thomas was saying, is you want to see if the company is going to have any revenue, because the company has very little cash in the books, and the cash that it does has, it's burning very quickly. That's not uncommon for a company that's just IPO'd like this company has. But without a lot of revenue, certainly without it being profitable, there's better opportunities out for traders right now, or for investors, I should say. I would put it on a watch list. I'd be looking for new partnerships. I'd be looking for new markets that they're entering into, and to see if the company has a path to profitability. Otherwise, I think this is one that you sit on the sidelines for now.
Yeah, right. One big red flag for me is the low float quality and the opportunity for dilution. They're
Yeah.
going to need money. They're going to need money to develop their product. So the risk of dilution is high, and that will
Right.
weigh on the stock price moving forward.
Well, this has all been great information for investors and traders to consider when looking at getting into Serve Robotics right now. Thank you both for the great conversation. We're going to continue to follow what happens with the stock right here at MarketBeat. But for now, happy investing.